Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of Mahanagar Gas Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions when the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manikantha Gare from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Rituja. Good afternoon, everyone, and festive greetings to all of you. On behalf of Axis Capital, I welcome all participants to the conference call. Today we have with us Mr. Sanjeev Datta, Managing Director, Mr. Deepak Sawant, Deputy Managing Director, Mr. S.M. Ranade, CFO, and Mr. Rajesh Wagle, SVP Marketing. We'll start with brief overview of the company's performance for Q2 FY21, and then we can have a Q&A session. And thank you. Over to you, Richa.
Thank you, Mani. Good afternoon, everyone. Before we begin, I would like to mention that some of the statements made in today's conference call may be forward-looking in nature, and we believe that expectations contained in the statement are reasonable. However, the nature involves a number of risks and uncertainties that may lead to different results. The risks and uncertainties regarding fluctuations in sales volumes, fluctuations in forex and other costs, and our ability to manage growth. I urge you to consider this quarterly numbers are not a reflection of long-term trends or any indication for full year results. They should not be attempted for a long-term trend or any indication for full year results. They should not be attempted to be extrapolated or interpolated in future numbers. With this, I would now hand over the conference to MD sir for his opening remarks. Over to you, sir.
Thank you, madam. Good afternoon to all of you, and welcome to the earnings conference call of Mahanagar Gas Limited for the second quarter of the financial year 2020-2021. I would like to thank all of you who have connected for our earnings call today and wish you all happy new Samvat year 2077. As we overcome a health and economic crisis of very large proportion, let us hope that things get back to normalcy at the earliest. Nationwide lockdown implemented since last week of March 2020 to combat COVID-19 adversely impacted the company's operations from the first quarter of 2020-2021. Internally, MGL has successfully faced the challenges by safeguarding our human resources, shifting all support services to function through the company's IT backbone to undertake work from home, and by observing the prescribed safe practices. Though there have been easing of lockdown restrictions, even today, presence in our office establishments is to the extent of 30%. Issues with regard to restricted work environment and compliance requirements in respect of pandemic continue. As a responsible corporate citizen, we have continued to pay all our dedicated contractual manpower the minimum wages applicable during this period of lockdown. This has enabled better productivity from all service providers. We have also provided monetary incentives to bring back migrant contract labor. Though reasonable number of contract laborers are available, mobility within the city is constrained as local trains are not fully operational. Besides, access to societies and prompt grant of permissions by statutory authorities still remain a practical constraint. Gas supplies to all our PNG customers and to the CNG stations have remained operational 24/7 during the lockdown. Our emergency control room and customer services have also remained operational for meeting all emergency needs and for ensuring 100% customer support, while adhering to the required safety and social distancing guidelines. We also continue to fund various social initiatives under CSR projects for people impacted due to COVID-19 and the prolonged lockdown. Now coming to MGL's operations, we are rapidly expanding our CGD network in the existing license areas. During the quarter, 16,223 domestic households were connected. Thus, we have established connectivity for nearly 1.5 million households. We have laid 18.53 kilometers of steel and PE pipelines, thereby taking the aggregated pipeline length to more than 5,650 kilometers. We have added 3 new CNG stations, and with these, we have 259 CNG stations. We also added 28 industrial and commercial consumers, and thus, as on quarter end, we have 4,046 industrial and commercial customers. With respect to our Raigad geographical area or GA, we are connected to more than 26,500 domestic households and 15 CNG stations are operational. CNG sales in Raigad reached the average level of 30,900 kg per day in the month of September 2020 in spite of movement restrictions. It is expected to go up when some more CNG stations become operational in coming months. In Raigad GA, we have laid 7.82 kilometers of pipeline during the quarter, thereby taking the total length of pipeline in Raigad to 109.82 kilometers. Despite the impact of COVID-19, during the quarter, we achieved overall sales volume of 2.073 MMSCMD, consisting of CNG volume of 1.276 MMSCMD, domestic volume of 0.463 MMSCMD, and 0.334 MMSCMD supplied to the industry and commercial segments. Significant volume recovery trend is seen with an increase of 86% in overall sales volume compared to previous quarter. In case of CNG, sales volume has reached from 0.48 MMSCMD to 1.276 MMSCMD, which is an increase of 166%. In case of domestic sales, volume has increased from 0.429 MMSCMD to 0.463 MMSCMD, which is an increase of 8%, while in case of industry and commercial segments, sales volume has increased from 0.204 MMSCMD to 0.334 MMSCMD, an increase of 64% compared to the previous quarter. As a result, current quarter EBITDA is rupees 221 crore, which is 176% higher as compared to previous quarter EBITDA of rupees 80 crore. A new high is reached on the margin front, with EBITDA being at 43.6% for Q2 compared to previous quarter EBITDA of 30.6%. Net profit after tax has been rupees 144 crore in the quarter as compared to rupees 45 crore in the previous quarter, representing a 220% increase. Now let us look at some recent developments and implications thereof. Firstly, the company had requested PNGRB to extend the timeline for achieving the minimum work program or MWP in respect of inch kilometer on account of slowdown due to COVID-19. PNGRB has issued public notice dated November 5th, 2020, extending the MWP timeline due to COVID-19 lockdown for various geographical areas. An extension of 251 days for Raigad GA has been granted. The extension will surely help MGL to meet its inch kilometer target. Secondly, PNGRB has also notified Petroleum and Natural Gas Regulatory Board guiding principles for city or local gas distribution network as Common Carrier or Contract Carrier Regulations 2020, wide notification dated September 30th, 2020. Access code and tariff regulations await notification. However, we believe that many clarities will have to emerge before these principles and regulations are finally implemented on the ground. Thirdly, the oil marketing companies or OMCs have raised the demand for a steep hike in trade discounts while selling CNG from their retail outlets. We hope to settle the matter through negotiation and involvement of other stakeholders. In Raigad GA, we have recently received permission to lay pipeline of 8.5 kilometers from PWD at Rasayani to Panvel. Further, permissions to lay 23 kilometers of pipeline on NH 166D, that is Khopoli-Pen Road, and 5.5 kilometers on NH 17, that is Goa Road, from Palaspe Fata to Aswat Petroleum are in process. We have procured land for setting up a city gate station or CGS for receiving gas from GAIL's pipeline at Sabroli in Raigad GA and are likely to complete the CGS connectivity in a year's time from now. MGL seems to be at a takeoff point for rapid progress in next 3 to 4 quarters in view of new highs in margins, sales volume reaching 3 MMSCMD in November, and infrastructure getting ready in Raigad to tap industrial load. If factors like spot gas prices, Brent level, and rupee-dollar exchange rate remain favorable, we can look forward to steady or even improved EBITDA margin per unit. With this, I conclude and would now like to open the floor for questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to address all questions from the participants, request you to limit your questions to 2 per participant. If you have a follow-up question, we will request you to please rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Rustagi from UBS Securities. Please go ahead.
Thank you. And sir, congratulations for recovering the volumes and performing in such a tough environment. Sir, I have 2 questions. First question relates to the volume recovery in the third quarter. So could you help us in understanding how has been the volumes in the month of October and November? And which segments are doing well or which segments are still lagging behind?
The volume recovery continues into the third quarter, and the domestic segment has always been taking a bit more than average because of less eating out and more cooking at home.
Yeah.
Industrial segment has also more than fully recovered. So they are going full blast.
Okay.
PNG is also showing an increasing trend, and it is the commercial segment which comprises of large 5-star hotels plus restaurants, which is relative to the other 3 segments that is showing a slower volume. But in November, there have been days when we have crossed 3 million sales. That shows an improving trend. So pre-COVID also we were averaging slightly above 3 MMSCMD.
Sir, did you say that CNG is on a recovering trend, but are we like around 90% of CNG volumes, or we have already recovered the past year levels? If you can help us with some numbers.
We are between 90 and 95% of our legacy CNG volumes.
See, in spite of CNG volume is between 90 and 95%, our overall volume is more than what we were having pre-COVID. So recovery in other sector is also very impressive. So CNG volume is also poised to grow. So definitely the growth will be on the much positive side.
Okay, great, sir. And sir, my second question relates to this OMC's negotiation. So where you think that the matter can be settled, and since we have not made any provision, is this amount likely to be significant, and is this amount coming because of open access regulations are under proposed or draft stage at the regulator from the regulator side?
OMC trade discount increases. Number one, okay, it may have something to do with access code or something that can be better answered by them. But it's a part of normal negotiation. Every say 3 years or these negotiations do take place. Earlier also such negotiations have taken place. Right now, the basis based on which this increase has been requested by OMC is not yet with us. So it will be a bit unfair to comment upon the justification of the increase. But once we receive more details, how they have calculated, how they have gone about it, we'll definitely be negotiating with them, and we hope the matter will be amicably settled the way it has been in the past also. You will recollect earlier also 2015, 2018, such kind of negotiations were there. And ultimately at a properly viable level figures, the settlement had taken place. So we are positive this time as well. And all said and done, I mean, we should also be cognizant of the fact that whatever increase may come in, probably MGL has the headroom and ability to pass to the gas cost if the need so arises.
Okay, great, sir. Thanks a lot for answering my question. Thanks a lot, sir.
Thank you. The next question is from the line of Nafisa Gupta from BOA Securities. Please go ahead.
Hello. Good afternoon, sir. So the question from me is that in this current quarter, the company took a CNG price hike of ₹1. But when you compare the price realization, the average realization in the quarter, it is flat on a sequential basis. Sir, any reason why?
We sell CNG channels to different things. You know, in case of ONCs, they will price with the direct sales to which MGL prices are different. There are one or two other channels also.
Sorry to interrupt you, sir. Your voice is breaking. Can you please check?
Okay, I will just repeat. CNG prices direct may or may not be at times seen, because there are 3 to 4 categories at least of CNG prices. There is one price prevent with CNG outlet, that is through OMCs when we take.
Sir, apologies, it's still very noisy. Can't make out really.
Is it now better?
No, sir. Still there is a disturbance.
Hello? Is it clear now?
There is a disturbance from that line, sir.
Disturbance from the line?
Yes.
Then I now.
What sort of sound you are able to hear?
Like there's something which is breaking when you are speaking something.
Breaking type of thing.
Yes.
We are able to hear very clearly.
Sorry?
We are able to hear you clearly, but is the voice still breaking?
There is a static disturbance from the line, sir.
Static disturbance over.
Sir, I will call you back.
Okay.
Ladies and gentlemen, please give us a moment while we check the line of the management. Ladies and gentlemen, thank you for patiently holding. We have the management line connected back. Please go ahead.
Repeat the question. Can you repeat?
The last question was from the line of Nafisa Gupta. Please
Sure. Yeah, thank you. So my question, sir, was that in the quarter we see that the CNG price realization was kind of flattish sequentially, QOQ basis. But even though we took a price hike of ₹1 in the quarter in July, so just wanted to know how.
Okay, there are a couple of reasons for that. First of all, this price rise which we had taken was done almost in the fag end of July. So it is only effect of August and September will be there. That's point number one. Secondly, there are 3-4 channels through which we sell our CNG. There will be OMCs, one through our direct outlets, another through STUs. In all different categories, the net sales realization differs. So depending upon which channel has sold more as compared to other quarter, sometimes you will find such kind of changes in the net realization.
Okay, sir. Thank you. And so my next question is that previously when we've revised the trade discount to OMCs, have we done any kind of pass through to customers, or has it directly impacted our sales?
No, we had passed through the cost.
Okay. Entirely, sir, or a part of it?
Entirely.
Entirely passing to customers, any kind of hike?
At times there could be slight time lag, that possibility could be there, but otherwise after the conclusions are there, on prospective basis all these price rises are taken care.
So any trade discount that you increase to the OMCs will be passed on to the customers?
We believe so.
Okay. And sir, any guidance on your EBITDA margin for the full year and maybe next year, given that last quarter was this like 2Q was very, very high, but any overall full year guidance?
Yes, I think guidance is pretty positive, and there are reasons that you have seen already the levels of current EBITDA margin, plus with increase in volume over a quarter 3 and quarter 4, as the volume increases, the cost per unit, particularly administrative and other fixed costs, will drop on per unit basis. So that is also going to help us either so margins could be steady or even improvement can be thought about. A lot will also depend on what are going to be the oil price level, or maybe the spot gas costs and rupee dollar exchange rate. Now, no doubt the spot gas cost has been hardening a bit, but I think some similar changes have been seen in oil price levels also. In fact, in quarter 2, the sales realization in industrial and commercial was quite impressive as compared to quarter 1. So assuming such scene continues at Brent's level, spot gas level, and even rupee dollar exchange rate, I think all these things augurs well for the company, coupled with the volume increase also we'll soon now see. In fact, we have already reached, I think MD covered in his speech, that 3 million level SCMD basis, SCMD basis, we have already reached in the month of November.
Got it, sir. Thank you so much.
Thank you. The next question is from the line of Chinmay Gandre from Bharti AXA Life. Please go ahead.
Yeah, sir. Thank you for taking the question. Sir, with respect to the OMC trade margins, so currently how much margins are we providing per kg terms?
Sir, voice is not clear.
Hello, can you hear me?
Yeah, now better.
Yeah, I'm asking, so with respect to the OMC trade margins, sir, how many rupees per kg are we paying right now to them?
It's a range. It depends on which geography we are talking about, particularly in Mumbai and outside Mumbai. The range is from approximately 3 rupees 70 paise per kg to 4 rupees odd per kg. That's the range in which we are paying.
And sir, post our settlement in July 2018, so the rate which you are mentioning, 3.10 to 4 rupees, is basically after adjusting the inflation and related indexation. That is how the current rate has been come up to, right? Which we are providing in our P&L.
Sorry, currently these are the rates which are currently prevalent, which actually we pay in cash terms basis to OMCs.
Yeah. Okay. But this would have increased in terms of the inflation, which is based on the formula post your settlement in July 2018, right?
See, this will be one of the factors which will be taken into consideration while settling the prices.
Okay. And sir, my last question is basically, sir, any timelines like when we can see you guys coming to end of negotiation with respect to this with the OMCs?
It's bit premature to predict right now. Number one, there are 3 oil marketing companies which we need to deal with. But more importantly than that, whatever increase they are expecting, we are yet to receive the full details of it. I think the progress in negotiation will be much better once we receive the details from these OMCs.
Okay. And if I can just add, sir, in 2017-18 also the trade margins we were paying would be say in the range of say 3 to 3.5 rupees that time.
It was a step-by-step increase.
On an average, the increase over the last 5-6 years was about 9% per annum.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
So in your opening remarks, you mentioned that if certain parameters play out, you will increase on the current margins that you had kind of reported this quarter. If you could broadly elaborate to us what are those? We understand LNG prices, currency, and just wanted to understand the broad trajectory of margins which you will continue to maintain over the next couple of years. So will we breach the 10 rupee range going forward? If you could just give some idea and guidance on that. If not a guidance, at least a color on how we should see this.
See, obviously it's very difficult and may not be right also being price sensitive information, to predict some figures and those kind of things. But what we can always look at is what are the factors which help us and at times sometimes do not even help us. So like if you compare Q2 versus Q1, I think our margins improved considerably in case of industrial sales. One of the primary reasons was the alternate fuel prices. For example, a majority of our industrial customers use LSHS as alternate fuel. On average basis, let us say for Q1, LSHS was in the region of around 24,000 rupees per ton, which increased to nearly 32,000 rupees per ton on an average basis in Q2. And with the kind of pricing philosophy which we have built in, it helps us get a substantially higher sales realization in industrial customer category. No doubt spot gas cost did increase a little bit, but I think increase in net sales realization was proportionately much more higher. Similar was the case in case of restaurant category or commercial, what we call it. One of the important alternate fuel over there, particularly with restaurant categories, 19 kg LPG cylinders. There also price of alternate fuel had increased a bit, and that helped us to get us better sales realization and ultimately better gross margin also. So this number one, I am saying the level of oil price level is very important for us from the pricing point of view. So equally is important is spot gas cost. Now you have seen, if you observe last 2-3 years, there have been substantial drop in spot gas price levels, which had definitely helped us. And we now need to see how going forward the spot gas prices are going to reflect. And it is also important to see the proportionate increases in oil price levels and spot. Like currently the situation is, no doubt spot gas is slightly hardening, but as long as your general price, oil price levels also move in, and assuming the proportion of increase in oil price level is higher, you may still to gain in industrial commercial sector. So that's point number one. If we are talking about, let us say, rupee dollar exchange rate, I believe right now it's reasonably at settled level, assuming the pandemic situation over the world remains reasonably static or improves further, then whatever other geopolitical factors are also there. Depending upon that, the rupee dollar exchange rate stability will be known to us, and that will be very important to us for the simple reason we buy entire gas in dollar terms, whereas sale in rupee terms. Hence, rupee dollar exchange rate is also another important factor for us. And finally, if we are talking about EBITDA margin, I think whatever even right now we have achieved is with much lesser volume. As the volume increases, the advantage, leveraging fixed cost and all that, rupees per SCM basis, the fixed cost will definitely drop down. That will further help us to improve the margin. So we are quite hopeful that the things are quite good in the days to come, hoping for steady margins unless whatever macro factors we talked about go altogether wrong. Otherwise, things are looking quite positive now.
Would it be possible to give the industrial gross margin for the last 2 quarters at least, whichever has gone by? And if, let's say, the MRP also for this segment?
This margin per se, we don't disclose customer category wise, but your second question probably I can answer.
Yeah, MRP at least if you can give us.
Yeah, realization for industrial, for example, in quarter 2, this is I think net basis, it is 29 rupees 23 paise per SCM.
Okay.
As against,
this is for the LSHS category.
Yeah, industrial category. As against quarter 1, it was 22.80. Whereas in case of predominant restaurant category, current quarter was in the region of 32 rupees per SCM, whereas earlier quarter, that is quarter 1, was around 28 odd rupees.
Okay, this is net number, not with the taxes.
These are net realizations, yes.
Got it, sir. And between these 2 quarters, at least on the gross margin level for your CNG, is it more or less flat? I mean, you don't have to disclose the number, but at least on that basis, CNG is more or less flat.
You can't say flat as such because there is some price rise also we had taken, no doubt. It was a bit late and net realization was late because we implemented in July end almost. So only August, September we have seen the benefit. But I think quarter 3 onwards we should see some improvement in there as well.
Okay, got it. Thanks a lot, sir. Thank you. Sir, just if I had to add just one thing. Have you increased the commercial and industrial prices in 3Q?
Commercial industrial prices in?
3rd quarter. This quarter, is there any increase?
So there is a pricing philosophy which we follow, and there are contracts signed with the customers. So the price movements take place in line with the contract. Generally, very simply explained, it moves in line with the oil price levels, that is alternate fuel prices.
Correct, sir. So which means crude is more or less at the same level, and we have not taken any price. More or less the price should hold. Whatever you mentioned in 2Q and 3Q.
It depends on oil price levels, the alternate fuel prices. And there could be some slight time lag of say 1 month or so. But otherwise, broadly in line with oil prices. If oil prices drop, then it can drop also.
Got it, sir. Thanks a lot, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all participants, request you to limit your questions to 2 per participant. If you have any follow-up question, you may rejoin the queue. Thank you. The next question is from the line of Bhavin Nandi from B&K Securities. Please go ahead.
Thank you for taking my question, sir. Just wanted the exact quantum of volumes that we are doing from OMC outlets today. I mean, on a steady state basis?
Yeah, it may not be right to see at current level.
And last year, sir, if you can give us the last year's number.
Yeah, something like that. I think it will be
between 60 and 65%.
60 and 65. All right.
Between 60 and 65%.
Yeah, total.
Sure.
Of the total CNG sales.
Sure. Got it, sir. Sir, also you in the initial remarks, it was mentioned that the access code notification is pending, but even after the notification, some clarifications would be required. If you can elaborate on what clarification is MGL seeking?
Some of them are legal in nature, some of them are technical in nature. Just to give you an example, the draft access code regulations stipulate that if the authorized entity does not connect the shipper in time or does not give connectivity, etc., then the shipper can lay his own infrastructure to connect to customers, which is going totally against the concept of authorization. If anybody is to lay any common carrier or any CGD related infrastructure in the city of, in a geographical area, they actually have to go through a whole full-blown process of authorization. Right. Just because he's a shipper and he's got hold of some imaginary customer who's not getting connected, that doesn't automatically give him authorization to lay infrastructure. So then there are some technical points as regarding the percentage of open access, so how exactly that is to be calculated, how exactly is the capacity to be determined, because again, the regulations are saying something on it, but none of it has happened on the ground.
Right.
Something called a capacity determination assessment group, which has to be formed by the regulator. And in many places, the regulator is asking the entities to do themselves things which the regulator or somebody else is supposed to do as per the regulations. Even in the tariff regulations, for example, current draft says that the authorized entity needs to determine his own tariff. And only if there is a challenge or a dispute, then the regulator will step in. But again, that is totally against the scheme of the Act.
Right.
But there are challenges around this open access issue.
Got it, sir. And just one last thing, any update on the infra exclusivity extension?
Can you repeat that, please?
The extension, any progress so far?
Extension of infrastructure.
No, this whole thing will get clear only after the legal quagmire is resolved. The exclusivity regulations also are sub judice. So unless all that is resolved, it is status quo.
Sure, sir. Sure. Got it, sir. Thank you so much.
Thank you. The next question is from the line of Vidyadhar Ginde from ICICI Securities. Please go ahead.
Yeah, thank you. Good afternoon. So my question was on, just wanted some clarification in future if as and when there is, or if and when there is competition, when it comes in, and let's say the OMCs are the competitor. So as per your current arrangement with them, is there anything which prevents them from just putting their own CNG dispenser in a CNG station where they have your dispenser currently?
How this whole thing plays out, only time will tell, and the courts will finally dictate. But you also need to keep in mind one thing: the current draft regulations talk of releasing only up to 20% of capacity.
Correct.
And even if we lose the whole 20%, we will earn some tariff on that because we are a central government authorized pre-PNGRB entity. And again, any loss in volume, share or margin, etc., there is enough headroom in the prices of CNG, etc. And we don't think there will be that material disadvantage. Actually, in cities like Mumbai, it's always, supply side is usually the constraint. So even if a few more players come in and open up CNG stations, it will only help in releasing some more pent-up demand.
Okay, but they can set up. Technically, as things stand, they can just put another dispenser. There's nothing preventing them from doing as things stand.
As of now.
Again, as of now, I mean, there are places where PNGRB has gone on record in courts saying that the whole CNG station is a part of the regulated infrastructure. Again, there are a lot of legal issues and challenges around this.
Because in the interest of consumer also, it doesn't make sense for the incumbent, for a newcomer to just come just when he has a ready infrastructure to go and create an infrastructure where again there are these issues like you are saying that pipeline he cannot create, because everywhere you seem to be raising questions making it difficult for the newcomer to do. And I'm not sure PNGRB is probably thinking exactly the other way around because they want the consumer to benefit.
No, consumer benefit everybody wants. We also want it. Only thing is it has to be done in an effective way.
Because the...
Today the authorized entity is the only one who is selling CNG in its area. If you look at any large established cities, metros, etc., majority of the retail outlets belong to the 3 oil marketing companies. So if somebody claims that a CGD entity has got monopoly today, and if they open up, it will effectively become duopoly or 3-4 people who have got the whole market with them. The other thing is, for any monopolistic situation to prevail, I mean, there has to be a proven, abuse of monopolistic power. Today, we are selling CNG at less than half the price of petrol on energy efficiency basis.
Sir, that is because your taxes are different. Like if CNG is taxed as much as petrol, diesel, then...
No. If you look at it from a pure economic angle...
No, but that is not because of you. That's because of the government policy.
So on a marginal basis, I can sell CNG at 80 rupees or 75 rupees.
In fact, my worry is that the way your margin has been creeping up, in fact, it's been galloping up over the last few years. Even if you challenge this, if the regulator does come out with something on competition and you challenge it in court, I think the fact that your margin has been like even right now, even in case of CNG, I understand that your volumes were down, but you didn't pass on the full fall in gas cost to the consumer. Similarly, Panna Mukta Tapti gas, when it fell, the price went down, you did not pass it on for a few months. So don't you think this will work against you if you legally challenge? Because I'm sure the courts are going to look at consumer interest above everybody else's interest. So this focus on margin which you have right now, on the industrial commercial side, it's fine because there even the gas which comes to you, even there probably an argument can be made. If there are more than one player, probably the consumer will get a better deal. But certainly when the notification, when from 2014 you started getting first top priority for domestic gas, the clear notification guidelines from the government was that any fall in gas cost will be passed on to the consumer. That has not happened. Don't you think it will work against you at some stage in this whole process?
We were getting domestic gas before 2014 also for 100% of our requirement.
That was not the case for IGL. It was different for different people. IGL was, that was again one of the changes which happened at that time. So you were lucky to get entirely domestic gas even then. IGL, I'm fairly certain in FY14, before this change came in, had to use some LNG even for supply to the domestic consumers. So where I'm coming from is that this margin which you are doing right now is great. But I think in the kind of, if the regulator comes out with competition, allows, and then you take it to court, which you probably will, I think this the way you are trying to ramp up your margin, it might work against you in court. Don't you think that's something which you should consider?
Pricing is same. Practically, if you see across the country, beer pricing is almost same. Not that our customers are. Yeah, exactly. Because of course there are geographical reasons for our tax regimes are different in different states. The transportation tariffs are different, but net of that, practically,
our costs are pretty competitive.
Yeah.
And
that is true. All of you are making money. It's not just, I'm not doing only MGL. Even IGL is doing the same.
Gujarat Gas is doing out for a special treatment that may not hold.
The other way to look at it is, okay, MGL's margin might have increased a bit,
The efficiency.
No, saving has gone up from 20 rupees to 40 rupees per liter.
Part of it because of our own increased efficiency also. It's not simply that we are charging high.
All over India, the CNG prices are in the same region.
Whenever we are fixing a price,
everybody is having, and same goes with the oil marketing companies also. They are also making profits out of their MS and HSD.
Wherever they are independently marketing in their own GX, I think there is no great difference in the way people are, derived or coming to
oil marketing companies are also in CNG business. They are also having this type of prices.
Mr. Kande, may I request you to please rejoin the queue because there are other participants waiting for their turn. The next question is from the line of Sabriya Hazarika from MK Global. Please go ahead.
Yeah, good afternoon. So I have two questions. First one is relating to Raigad. So currently you mentioned that around 30,000, 40,000 kilogram of CNG you are selling. But what is the total volume comprising both CNG and industrial, commercial and domestic PNG in Raigad currently? And what is the the total potential in the next, say, 5 years in Raigad?
Currently, more than 95% of the volume is CNG. There is very little, there is some industrial sale, there is some domestic sale. Commercial is not there. And if you're looking at a 5 to 6 year horizon, we would be looking at a 0.5 to 0.6 MMD kind of a volume ramp up, predominantly happening in CNG and industries.
Okay, so in 5 years you are expecting a 10x kind of a volume growth from Raigad.
Yeah. Yes, because the base is low.
Okay, and this will be okay, and this mix will be like, again, it will be how much of this? I mean, I know that it's a contiguous area between, say, GA2 and GA3 because it's like in Navi Mumbai, it's both part of Navi Mumbai. But how do you see the mix? I mean, of this 0.5, 0.6, how much will of this will be CNG and how much PNG?
It will be roughly half of industrial and CNG. Maybe 5 or 10% of 5% of the total could be domestic and commercial.
Okay, 5 to 10% will be domestic commercial, and in the remaining 50-50 will be CNG and.
I won't say 10%, maybe 5% will be domestic and commercial.
Okay, out of remaining 95, it will be 50-50 CNG and industrial, right?
Yes.
Okay. And second is just a bookkeeping question. How much was the industrial PNG volumes for the quarter, and CNG volumes in kilogram?
Industrial volume for quarter 2 was 0.797 MMSCMD. And your question was CNG sales in kg. 0.797. Industrial, na? Oh, sorry. 1 second. Industrial sales volume is 0.233 for quarter 2, as against quarter 1 was 0.146.
Okay.
And your CNG sales you wanted in kg.
Kilogram, yeah.
Say for example, quarter 2, it is 8.47 crore kgs for this quarter. 8.47 crore kg.
8.47 crores. Okay.
Kg as against 3.20 crore in the quarter 1.
Right, got it. Thank you so much, and all the best.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Good evening. Thank you very much. First of all, if you look at the second half prospects, you have, I think, taken a price cut after the reduction of the domestic gas prices. So given that and the increase in the spot prices, given the LNG prices, is there a risk of some pressure on margins? Because I know it's a little bit volatile, but if you look at the second half on an average, if you see the current, unit cost per SCM, is there any risk of the EBITDA per SCM falling because of these factors?
Risk of?
Now, if you see the spot gas prices, they have gone up, and you have already taken a price reduction, if I understand, after the October domestic prices were announced for the APM gas. So, assuming that your CNG volumes are pretty stable, is there a risk of the industrial and commercial segment margins dipping because, especially the oil prices fall? Because there is an increase in your input cost based on the spot LNG prices.
Yes, I hope you are pretty clear that entire industrial commercial volumes are made through imported gas, and there is no domestically produced gas element over there. Whereas in case of CNG domestic, it is almost entirely domestically produced. That's number one. Coming to, I think probably you are asking risk relating to industrial realization or margin or commercial, that on one hand spot gas costs may harden, whereas the oil price levels may dip. I think that's the scenario you are talking about. Yes, in this sort of scenario, there could be a possibility of drop in the margin, industrial and commercial. There has been some correlation between oil price levels and gas costs, but sometimes spot behaves little differently. We believe, going by the demand supply situation available world over right now for LNG, I think even though spot gas prices hardened too much, very steep increase hopefully need not be there. I mean, this is of course our belief. Let us see how the things will unfold. And third element will be, suppose rupee dollar exchange rate, though you didn't talk about it, suppose that turns favorable, which there are some signs of similar nature, then even that can also help us to say maintain the margin or even improve margin.
Okay, and the next thought is, if you look at the outlook for volumes in say FY22, can we assume that to be somewhere near FY20 levels? Assume we come out of this COVID and we have this 90-95% equivalent of normal volume, because from 21 base it's difficult to estimate that. So would a CNG volume run rate of around 2.2 and close to 1 million of PNG be something to go by, say FY22?
See, our present volume itself has gone above 3 MMS CMD as of November. So overall volume for the year maybe around 80% of that if you go for the average volume. And next year, since this 3 MMS CMD is with CNG around 90 to 95, which is poised to grow around 110%. So the future volume, now CNG is also constituting 70% of the total sales. So future volume growth will be much higher in 21-22.
Okay. So then one last thought on the Raigad volume. Is it contributing meaningfully to your gross margin or EBITDA margin? And what is the kind of broad share of earnings you can expect from the Raigad once it's at peak?
Currently, the volumes in Raigad are probably just 1 or 2% of our total volume.
Yeah.
So contribution may not be that much. But going forward, we expect the rate of growth in Raigad to be much higher than GA1 and GA2, because the volume base is small and the potential is relatively large compared to the current sale.
So in terms of the EBITDA per SCM, would it more or less mirror the Mumbai or the current margin?
Mr. Ramesh, I'm sorry to interrupt. May I request you to please rejoin the queue?
Okay, thank you.
Thank you so much. The next question is from the line of Yogesh Patil from Reliance Securities. Please go ahead.
Thanks for giving me an opportunity, sir. Question relates to CNG vehicle conversions. Sir, basically, if you could throw some light on CNG vehicle conversion or addition rate currently, and how do you see it would be in the future, subject to start of 2 metro lines in Mumbai geographical areas?
Well, during the lockdown, the CNG conversions had actually stopped. April, May, etc., they were zero. And there was some addition through the OE sales of Maruti and one or two other OEs. Over the months, it has improved, and I think in the month of October, we have reached again pre-COVID level of conversions of 6,000 plus vehicles. We expect that situation to continue or improve. Especially in the OE front, there is a good scope for improvement because more and more OEs are now coming up with factory-fitted CNG variants, which typically customers prefer compared to retrofit.
In the last 6 months, there are almost 25,000 new four-wheelers, around 13,000 three-wheelers have been inducted in the CNG fleet. So CNG conversion numbers have increased, I think maybe around 36,000 to 37,000 vehicle added during the last 6 months.
Okay. And sir, second question relates to how many CNG run based buses are added in first half of FY21? Any ballpark number you have?
Can you repeat the question, please?
CNG buses.
So how many CNG run based buses are added to fleet in first half of FY21?
Somewhere between March and April, about 500 buses added on.
Okay.
Which are contributing now properly to the sales. In fact, DST sales volumes in CNG are higher than what they were 6 months or 8 months back. And we are expecting maybe another 500 to 800 buses to be inducted over the next 6 months or so. DST has come out with another tender for additional buses. That will also going forward contribute to the volumes.
Okay. And sir, last one. Sir, could you please provide a capex guidance for second half of FY21 and FY22?
Capex, we can right now tell you what we are aiming at. Considerable things depend upon how fast the statutory approvals will come through. Because you must be aware that whatever these governmental authorities give us approvals or even municipal authorities included are hard based. So hope enough progress takes place on that. But assuming on that front things go well, we are aiming at nearly 500 crores capex for this financial year and maybe 600 plus crores for the next financial year or even more than that.
And any target of number of CNG stations additions for next FY22?
Right now, we do aim at, the speed at which we have been moving last couple of years is 20 plus new CNG stations we were coming out, and not only new outlets, but we were also upgrading nearly 15 plus or sometimes even more than that. CNG outlets have been upgraded from capacity point of view. So surely that is the rate at which we would like to move forward.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Rohit Ahuja from BOB Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So 2 questions from my side. First would be on your industrial and commercial volumes. You said your margins were about 30 rupees per SCM. But I assume they consume LNG. And given the way LNG prices currently are averaging around $5 to $6, would it mean that we could have some kind of a margin valuation in the second half of this year from these volumes?
Sir, can you repeat? Can you be a little louder, please?
Okay. Am I audible now?
Yeah, audible. You can be a little louder, yes.
Yes, sir. So on your commercial and industrial segment volumes, you said your margins were in the range of 28 to 32 rupees per SCM. And given that you consume LNG volumes over there, the recent spike in LNG prices to about $6 per BTU, would it impact the margins in the second half of this year for these segments?
So not very clear with your question, but number one, that 28 or whatever 32 something we talked about were sales realization for industrial and commercial. Those were not the gross margin for those customer categories. We don't disclose customer category wise gross margins, etc. Those were net sales realization. That's point number one. Secondly, you are talking about hardening spot gas cost in the second quarter. Yes, no doubt the rate did increase and that did impact us adversely on margin. But what helped us to finally come out with better margins in these customer categories is the better sales realization, because the way our pricing philosophy works in most of the customer categories, particularly industrial commercial, it is highly dependent on alternate fuel prices. And in industrial, in our geographical areas, predominantly customers use LSHs. Now, since
so how is it in second half right now, as of now, given the way LNG prices have risen over the last 2 months?
Yes.
How would be Q3 and Q4 in terms of, do you see a decline from first half?
If no change happens in alternate fuel prices, then there will be decline. If there is a further improvement which is even proportionately higher than spot gas price, which cannot be ruled out altogether, then the margins may even improve.
Right, sir. So secondly, on CNG, you mentioned you already at about 90 to 95% of pre-COVID level in terms of volume currently?
Yes,
in the November month.
In the November month, okay. And when do you expect to cross pre-COVID level?
To a large extent, it will depend on when the local trains in Mumbai, get totally opened up. So that's when the last mile connectivity of auto rickshaws, which run from railway stations to residences, that sales volume will kick in.
And the office is also 30% strength as of now. So once the 100% strength will come, definitely the CNG sale will increase.
Yeah, on that line for me, sir, if you can give some data, like how many Uber, Ola are currently operating versus pre-COVID level?
It is what we are hearing is about 70 to 80%.
And that would be true about auto rickshaws and buses as well?
No, buses so much more are running than pre-COVID levels because of the urgent need for public transport. In fact, the state government has roped in the MSRTC diesel buses also from interior of Maharashtra. They are running them in Mumbai. The BST fleet is also running flat out. Basically, they are trying to take as much load off the local trains as possible.
And auto rickshaw will be how much operating versus pre-COVID?
Those would be around 80% or so.
Right. Thank you, sir. That was very helpful. Thank you.
Thank you. The next question is from the line of Abhilasha Sithania from Dalal and Broacha. Please go ahead.
Thank you for taking my question. So most of the questions are answered. Just one thing, I mean, you guided for FY21 and 22 volume growth, but seeing the overall infrastructure base and the kind of penetration level we have already reached, how do we see CNG and commercial volume base for the say after 22 on a sustainable basis? Like what will drive our volume growth apart from Raigad in the current region and new region? If you could just give some sort of guidance for the longer term.
Longer term guidance, we have always been maintaining 5 to 6% kind of a CAGR. On the CNG front, CNG is our biggest volume contributor. Since now, almost all the areas in Maharashtra have been, licensed out and authorized in places where, in the neighboring areas where there used to be no CNG, CNG is coming up. So the overall CNG ecosystem is, growing. That is going to benefit, everybody in this business, not only us, but the adjoining operators also.
Okay.
If you see overall potential point of view, in the CNG, the penetration level is pretty low even currently. It may be, if you consider addressable potential, we are hardly 30% odd plus. So that will give us a still good opportunity to improve the volumes.
Okay. And so in terms of CNG station additions, like in this H1 our growth rate in lackluster, because of the pandemic situation and all. How do we see that improving from the current level? Say in FY22, 23, what is the highest potential like the CNG stations we can add, and also the pipeline network, if you could just address.
I think CNG outlets we already talked about. It will be definitely 20 plus new CNG outlets which we will be aiming at on per annum basis, and apart from that there will be 15 to 20 upgradations also capacity point of view. This is the minimum thing we are looking at.
Okay, this you said about FY22, so after that also the number remains constant.
Yeah, similar targets will be there.
Yeah. Okay. Yeah, and same, if you could give any guidance for this industrial and commercial domestic this business.
Can you be more specific?
The pipeline network, how will we, add our this network?
Look, in GA1 and GA2, most of our basic pipeline network, the main grid is already in the ground. So typically, as we get approach new customers, we only have to lay the last mile connectivity and connect the customer, and then they start contributing to the volumes. To a very large extent, this is how volume growth happens in the domestic and small commercial market segments. In GA3, there is a lot of trunk pipeline laying which is happening and which will continue for a couple of years. So there it is a combination of both trunk pipeline laying and LNC which will get us customers.
Okay. Okay, fine. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Fine. Thank you. So, I hope that we have satisfactorily answered the queries raised by you, and if we can, I think, close the call now.
Thank you very much for.
Thank you.
Thank you.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.